Outhenticfx here. Today is just going to be a quick lesson on the importance of risk management and how we can use this to, grow and be profitable, right? Let's get into it. So, we all get into the industry of trading and we fund our accounts with large amounts, sometimes small amounts of capital, whether $100, 200, 1,000, 10,000, whatever the case is. And we find ourselves losing that money within the first week or even, second week of trading. And that's all because we do not have a proper risk management plan that we follow. So I'm just going to quickly, show you the importance of risk management. When it comes to trading, guys, you don't need to focus on the money aspect of it. You need to focus on the percentage aspect of it, right? It's more about the percentage than the money. A lot of people want to get into the game and just make 10,000, make 100,000 and a million in a week. It's impossible, guys. Consistency is very, very important, right? So to get into it, right, I just have, this diagram placed here. And I just want to show you that risking a small amount of, amount is way better than risking, 50 to 80% of your account in one trade, right? So look at it like this, right? We enter, sell here, we get clapped, we lose 1%. We down 1%. We enter, buy here, we get clapped, we lose 1%. We down 2% at that point. On the third trade, we are down 3%, right? Because we always risk 1% of the initial capital of that account, right? We do not want to take our account, fund $1,000, risk 50% of it, which is $500 on one trade. Second trade, risk 25. Third trade, risk 25, blow the account. No, guys, we risk 1%, no matter the lot size, no matter the amount of pips on that stop loss. We always need to risk 1% of the account, right? So we down 3% of the account then gets to 970, right? Everyone's having a bad week. We all crying. We all lost money. We all upset. The markets are playing with our emotions. We going through so many things. And then to get to the fourth day, you place your trade with accuracy using our supply and demand strategy over here. Bam, instead of using the retail way of trading. Supply and demand strategy over here. And then from there, what happens? You find yourself gaining a 15% gain on the account, right? 15% gain on the account. We already have accumulated our losses of 3%. And now we find ourselves getting an extra 1,115. Let me just change that quickly. 1,115 after this gain on the account, 15% gain, right? So we've recovered our losses and made extra profits, right? Just following risk management, guys. Risk management is very important. So what you can do is, you can go online, look for a pip value calculator, right? You add, for example, how much pips you're risking, maybe 30 pips on Euro USD with your lot size, right? You always need to make sure that you risk 1%. So 1% of 1,000, we all know, 1% of 1,000 is $10. So at that point, we need to figure out how we can, lower the risk on the account. Maybe it's pip wise, make it 10 and then lower the lot size to 0.010. Bam. So now you know that on your account, you need to have 10 pip stop loss and then use a position size of a 0.10 so that you risk $10, right? Sometimes you can risk 20%, 2%, sorry, but it's mostly advisable for you to, stick to your same lot size. Do not change lot sizes like certain people who will place a 1 lot, then a 0.50, then a 3 lot. You'll blow the account on the second day. So I just prefer figuring out how much is 1% of my account size, right? And then from there, figuring out how many pips. So look, if you want to risk 20 pips, you're going to have a 0.5. Risking 1%, which is 10. So it's all about finding out how many pips you're going to risk, how many pips you're going to need. And then from there, you're going to use a certain position size that only allows you to risk 1% of the initial capital of the account, right? So yeah, guys, that's the video for today. I'm nothing hectic because we're about to get into the juicy stuff. It's always just advisable for you to stick to a specific lot size that allows you to only risk 1% of your account, at most 2, and follow your rules, guys. Following your rules is very important. Do not overtrade. You can't place 15 trades in one day and use, 0.10s. By the time you place 15 trades, you're already down, so much on the account. It's better for you to have at least max 2 trades, 1 to 2 trades a day at max. Stick to your lot size, stick to your risk management plan, and you'll always be profitable, guys. Let's get into the juicy stuff, right? We'll catch you in the next video. Bye.